I think everything should be tokenized. But my concept of tokenization is different. You know, right now we're seeing like the people who are doing it are predators just looking for a quick buck.
Hello everybody, welcome to Value.Tokenized. Our today's guest needs no introduction. He is an early Bitcoin adopter, a legendary investor, and opinion leader. Ladies and gentlemen, we give you Jeffrey Wernick. Hello Jeffrey, it's a pleasure and honor to have you tonight with us. Talking about asset tokenization, do you think that it can be like a driving force for the industry, or it's more like a drawback from the original concept of decentralization? And can these two concepts like coexist together?
One is, I think everything should be tokenized. But my concept of tokenization is different. You know, right now we're seeing like Wall Street type people talk about asset tokenization. But what's their motivation? Their motivation is saying there are a whole bunch of assets out there that Wall Street won't monetize. So how do I create monetization events for assets that the traditional financial community won't monetize? So they're looking to monetize things that so far the capital markets refuse to monetize. So I think that's setting it up. So the question is, has the capital markets refused to monetize it because the capital markets are stupid, you know, or is the bet that the token investor will be dumber than the capital markets investor, you know, so they'll buy something that the capital markets were not willing to buy. So, I mean, if you look, there's a lot of cash around. So you have to ask yourself, you know, why isn't that cash not attracted, you know, to certain, you know, real estate projects? You know, really, if you have a good project, you know, the cost of capital for real estate projects are very cheap. So that question is why would it be cheaper to finance a real estate project through tokens? There's only two reasons why I think somebody would be interested, you know, in doing it. One is if the cost of capital is cheaper, you know, which means it's probably a dumber investor because the cost of capital is already cheap in the capital markets for real estate. The second thing is for governance. You know, if I go to a fund like Blackstone and I do my real estate development project, now I have the fund involved in the governance of the project. If I tokenize it, I have nobody involved in the governance of the project. So now I really don't have to answer questions to anyone because, as you know, the token projects, on the most part, have very bad governance. They don't, you know, they talk about a community, but at the end of the day, they don't say anything to the community once they have the money. So I think some people will do it because, you know, they'll try and monetize something the capital markets won't monetize, or will ask them to have more skin in the game. They'll say, you know, I'll give you money, but you have to put up 20% equity. So you say, maybe I can tokenize it and have no skin in the game, and I don't care about my cost of capital because I have no skin in the game, and I don't have anybody asking me questions. So if that's what tokenization becomes, there'll be tokens issued. Those tokens will be bad projects. The projects will fail, and then the concept will die because of token concept. So it'll replicate what happened in utility tokens. So, you know, I think I was the most outspoken person against Ethereum. And I wasn't against Ethereum because I don't respect, you know, Vitalik and what they were attempting to accomplish. The more the issue was how people were using Ethereum. Ethereum became the currency for, as I refer to as the shitcoins, you know, the ICO. So to the extent that the ICO would last, then Ethereum would continue to grow. But if the ICOs collapsed, which I predicted that they would more than a year ago, Ethereum would collapse along with the ICO. So the use case for Ethereum became the ICO. Given the fact that the ICO is now a discredited concept, Ethereum is a discredited project. So, which it should not been the case. You know, unfortunately, I think Ethereum was corrupted by Joe Lubin in consensus because he's the one that promoted, you know, with 1,000 people going around the world, you know, looking to promote, you know, shitcoins as just as a way of promoting people to value Ethereum, because I think he was one of the largest or second or third largest Ethereum holder. And until the ICO came out, Ethereum was not a successful project. This was the ICO that made it a successful project, and it's the ICO that has sort of like, destroyed a significant part of the value of Ethereum. So it's the misuse. It's not that utility tokens don't have value. It's the structure was bad from the beginning. The token design was bad from the beginning. The incentives and governance structures were bad from the beginning. So the concept died for a number of reasons, not because really there's a utility token is a bad idea. So I'm worried about the security tokens will follow the same life cycle as a security token. It's not that they don't have attributes that are important. It's the fact that the people who are doing it are predators just looking for a quick buck. So, I've had conversations with several people doing security token platforms, and I told them this story that when I was, when I spent some time living in Mexico. And when Mexico had the financial crisis in 94, 95, I was friendly with, I became friends with the finance minister and people at the central bank. And they really looked for me after it, because when I got to Mexico about 6 months before the crisis, and I predicted the crisis. So when the crisis happened, a few people thought I was smart and they started seeking my opinion. And so I told them, you should learn from what the US did well and did poorly when the US had its banking crisis, the savings and loans, in the 90s. And a friend of mine headed up what was then called the Resolution Trust Corporation, Bill Seidman. And the Resolution Trust Corporation was empowered to shut down and sell all the assets from all the failed financial institutions, which there were several thousands of. And so I brought the team from Mexico to meet Bill Seidman. And then a bunch of other people they met. But the last meeting was with Seidman. So I wanted them to meet with people who were asset managers, investors, and the whole ecosystem, so they get a perspective, and then end up with the guy who ran the whole thing. So they would accumulate knowledge leading up to the last meeting. So when they met with Seidman, Seidman said, you have a lot of stuff to sell, okay? So the question is, are you really committed to the market and selling? So Seidman said, I'm going to give you this advice. The first sales, make sure the investor makes a lot of money. Don't look to get the best price. Look to get investor interest. And if you get investor interest, you'll have a sustainable market so that other investors hearing the success of the early investors will come and look to bid on it. If the first investors have a bad experience, no other investor will show up. Given the fact you have several years to sell this stuff, okay, if you might make a lot of money the first sale, but then you'll be holding a lot of stuff for a long period of time that nobody will want to bid on because the first investor had a bad experience. So the same analogy applies to the security token space. If the early tokens come out are basically shit tokens, projects that capital markets think are terrible, but you can get somebody sell token community and they start out enthusiastic about it, but really they're shitty projects with shitty sponsors, the early investors will have a bad experience, and then people will say, don't ever talk to me about a token again. So, so the question is, what will be the behavior of people in the ecosystem? And when they go to a project, will they get the project, they'll say, are you committed to the life of a security token? And so initially, in order to have credibility about this concept, we don't want you to look to do this as an arbitrage, looking for a lower cost of capital or having bad corporate governance, where the likelihood of failure, has increased.
In what case security tokens can succeed as a model?
Security tokens should succeed to the extent that, depends on, your vision of the security token. So, my vision of a security token is very different than how people talk about. So if you have a project that lists a token and lists, if you have to think about when I list a security, okay, as a shareholder, let's look at the attributes of a capital market security, okay. First is, management and most people have very little skin in the game. So mostly it's you have a whole bunch of agents that you're trying to bribe to do a good job for you, right? You have a board members that you hopefully will do a good job for you, but the board members are paid off by the management team. You have accountants that are supposed to be working to give you, the investor, good financial statements, but the management pays them to provide, corrupt financial statements. So you got employees out there that might hate the management team, and they're all trying to figure out how to divide the pie that basically only has the people who are in charge of how to divide the pie end up happy with the division of the pie. So because what do they do if you don't like how much of the pie you get? I'm shutting this down and I'm moving to another country. Inequalities of bargaining power inside the firm. So a lot of the operation inside the firm are not market transactions where people have equal bargaining leverage. And a lot of the activity inside the firm is not done with a market, but it's administrative pricing. So, because most of the activity is inside the firm based on administrative pricing. And I can tell you one thing, if a firm starts having financial problems, they're not showing their balance sheet to reflect those financial problems. They're going to go to their accountants and their investment bankers like Enron, and they say, figure out how we can do transactions that make us look better than we really are. And then, so tell us the best story you can tell and get us a legal opinion that says that what we're doing is legal. So I don't think anyone who reads a financial statement actually believes it's an accurate depiction of what's going inside a company. So essentially what we have is company issuing shares where the incentives are that all the people who are supposedly representing shareholders, none of them represent shareholders, and the shareholders are relying on a ledger that they don't trust. So if you look at the whole ecosystem, it's a corrupt ecosystem. You've seen companies that go out there and they restate their balance sheets completely. One day from the next, they just sit back and say, see these assets that I told you yesterday were worth $1 billion? I woke up this morning and somehow there was a nuclear explosion and they're only worth zero. So how did one day an asset get restated that significantly in value? How could that not be a fraud? What was the event that caused them to reevaluate the assets? Because they know they were misrepresenting it. This is what typically happens when they change management. A new management comes in and it says, gee, the other manager, overstated assets. How come nobody's put in jail then if they overstated the value of the assets? So how come an event like that doesn't produce a criminal investigation? How come the accountants don't go to jail, the board members don't go to jail, and the CEOs don't go to jail if some new person comes in and says, I don't accept that valuation on the assets? So therefore, it must be a fraudulent valuation. But people seem to accept that. So there's a lot of criminal activity. Companies are known for doing earnings management. How do you do earnings management? You clearly align in one quarter so that if you have a bad quarter, you can carry over some of the accrued benefits of one quarter and use it to, and use it for next quarter. So you think about how this is what happens when you have a centralized control of ledger. So one thing is to sit back and say, I want to tokenize my real estate project, and I'm tokenizing the cash flows that are derived from the real estate project, but I'm not tokenizing the project, the ledger itself. The project itself, I'm still preserving the ledger. So, nobody's really talking about the fact that they're really running a project where they're actually creating not only a public ledger for the sale of the derivative of the project, but a ledger to represent the project so people can trust the ledger. So if we want to have people have more information, if the activities of the project are reflected on a ledger, then people have everyday knowledge of what's going on. So, and that they will trust that every day because the ledger will reflect the activity really going on in the project. You don't have to, the whole idea of a trustworthy ledger is you don't have to ask anyone any questions. The information's already there. So a company doesn't have to do a call and says, let me tell you about a business. You look at the ledger and the ledger's telling you everything you need to know. So you don't have to listen to the lie or the spinning or the propaganda machine of anyone. The ledger is telling you what you need to know. So right now, the people who are talking about security tokens are just talking about the consequence of securitizing the end result of the whole process, but they're not trying to really restructure that whole system that created that value. And so for me, the interesting aspects of tokenization and a distributed ledger is that we should try and move everything we do onto distributed ledgers, because that way we have a lot more information, we have a lot more transparency, and then you can ignore everything anyone ever says, and because then words become irrelevant. That's what trustless means. Trustless means is I don't need to have a conversation with you. I don't need to believe you. I don't need to trust you. I just know that you have no capacity to cheat, because nothing that comes out of your mouth is relevant, because everything is on the ledger and the ledger speaks for itself. So that changes incentives. So the whole concept of what should happen is that incentives should be changed. If you look at the Bitcoin ecosystem, a paper went into the public domain, right? In October, November, 10 years ago, a paper appeared. And in January, the Genesis block. So now you have a whole ecosystem of people working on it, right? You got miners, you got people doing development, and all that type of stuff. Who organized any of this? No one. I mean, this is the perfect example of the invisible hand. If you take a look at how many people right now around the world are actively engaged, in doing stuff related to Bitcoin and layer 2 Lightning Network and stuff like that. Okay, they're doing it all without anyone orchestrating or running this. There is no central authority. There is no controlling figure. There's even no influential figure, because Satoshi's not out there saying, I think this and I think that. This is the community evolving completely organically. And look how much, in spite of the fact that, Bitcoin has gone from, almost 20,000 to now to a little over 3,000. Keeping in mind that in 2017, at the beginning of the year, was 1,000. So that's still not terrible. So if you bought in January of 2017, and sold, January 31st, of 2017, you did very, very well. 2018 was the 1 year you lost money. And I think the whole run up in the price in the end of 2017 was all artificial. At the end of November of 2017, one of a group of friends that we had an email discussion group asked the group in general about what they thought of the futures contract that had been approved, and they all were saying it's going to be great for Bitcoin, and I said, so I wrote, and I said, look, I'm going to write a separate email, but nothing the government does, they're doing it with an intent to help Bitcoin. So I'm going to write a separate email that I'm going to explain my thoughts. So I sent a separate email that I called The Empire Strikes Back. As you remember from Star Wars, you're much younger than me. So the Star Wars movie, the evil was the Empire, right? And the Jedi warriors are hopefully the people, the Jedi Knights are the Bitcoin community. So, so I wrote and I said, this whole run up in prices is artificial. It's related to the futures contract. And I can tell you, either that day or within just a couple of days around the beginning of the futures contract, Bitcoin will peak in value. And in 2018, before the run up, Bitcoin was a little under 4,000. Before this 45 days, we ran up currently. I said in 2018, we're going to go back down to about 3,000. So all this run up is artificial. So this is part of their way of destroying Bitcoin. They hadn't figured out a way. So you're going to start seeing 2018 a year where the government's going to talk about regulating the community. They're going to start going after projects, and so this is the beginning. The beginning is to create a bubble, to bust the bubble, to discourage adoption. So, so in my mind, from 3,000 to 19,000 was artificial. So for my mind, all that whole period of time, and if you look at like the activity on the exchanges, they were small transactions. So they didn't drive the price. The retailer person buying 1 Bitcoin or less than that, they were not driving the token price. And I spoke to other, quote, whales, okay? None of them were selling. So, so I think that there is no evidence to me that that there was anything other than the government was instituting a run-up in the price to then to crash the price that would destroy the credibility of the story of Bitcoin, and then begin to attack the rest of the ecosystem. And as you know, in the beginning of 2018 is when government started banning Bitcoin, banning mining, and so the government in 2018 began a war. So when you think these and the BIS, the Bank for International Settlements, and these other banks, they all get together. All the central banks get together, and they wrote papers. Gee, if Bitcoin adoption grows, we can't manage central bank policy, so we can't preserve our national currencies. So what do you think that message says? The message says we have to kill this. We have to kill this whole crypto space because we always make sure we have to preserve control over anything anybody uses for payment, or anything anybody uses as a store of value. We got to protect our Wall Street friends. We got to protect our banks. We got to protect we got to protect us as governments. We got to protect our ability to collect taxes. So our ability to surveil everybody. We need to protect all this. What's the threat? Is everything going on in this space? So in 2018, I think all the stuff going on, I think was coordinated. So they all get together. They all have similar problems. And the central bankers talk to each other all the time. So they don't operate independently of each other. They're in constant consultation with each other. So, so I think that's what we saw in 2018. And, so how I like to think about it is 2018, the governments got together, figured out everything they could do to try and destroy this and didn't succeed. So there are more people now actively engaged in the Bitcoin ecosystem, building, layer 2 technology than there were a year ago. So the hash rate at the end of 2018 was higher than it was in the beginning of 2018. So the activity involved in the continued build out of the Bitcoin ecosystem has grown in spite of this big decline.
What do you think we will see in 2019?
Unfortunately, I think the ecosystem still needs more. I think what's kind of sad to me is there are not many thought leaders, and the thought leaders can't seem to collaborate and cooperate, because I think everybody who has the capacity of being a thought leader is more interested in making money and building their own personal brand. I've had a couple of projects.
Can you describe who has capacities? Who has capacities for being a thought leader, for example, besides from you?
Well, I think if we could get around like not talking about their own projects. Vitalik's a very smart guy. I've had debates with him on WeChat. So he's studying economics. He's getting smarter in economics. If Vitalik decided that he should transcend Ethereum as a project and not busy attacking Bitcoin and proof of work and quote the concentration of mining. If he just speculated more on all the things we could potentially do with any platform, not think about Ethereum, just think about the whole ecosystem. Unfortunately, I think, and there might be people out there who I don't know, because a lot of people I don't know, who are promoting the ecosystem. But of all the conferences that I speak at, I notice I'm the only one speaking on behalf of the ecosystem. So there's nobody out there. People are pushing their projects. Very few people are speaking on behalf of the ecosystem. I've tried to organize through other people I know who are more social than me, that I wanted to put a handbook together for people. So they, I tell the story that when I started my career at Salomon Brothers. So when I was at Salomon Brothers was the biggest trading firm in the world at that point in time. I showed up in June of 1978. Was my first day on the trading floor of Salomon Brothers, and it's either June 12th or June 13th of 1978. And I remember walking onto the trading floor, and it was one of the most awe-inspiring days of my life, walking here and seeing, the trading floor of Wall Street. Salomon Brothers back then was not known for investment banking, not that it had a bad investment banking department, but it was the place to trade. It was where the legendary traders were. So I was shown Bill Simon's desk, who was Treasury Secretary. John Goodfriend would sit in his desk in front of the whole trading floor. John Merriweather, all the big names, and then where my desk was. And it was pretty, awe-inspiring day. And, when I went around the desk, I saw for all the new people, they had this book called The Money Market by Marcia Stigum. The book was over 600 pages. And in the book, they had a bunch of chapters on, all the instruments of the money market. So you really understood in depth each instrument. Because clearly, if you're university, you don't have trading experience. You might say, interest rates are going to go up or down, but the mechanics and the details of all the instruments, nobody knows when they just come out of school. So you have to learn that stuff. So they had an in-house training program. One of the great things I liked about, most of the things I didn't like about being on Wall Street, but the thing I did like about it is the commitment that they had to training people. So there was a training program where people did a rotation. I didn't go through the training program because they wanted me just to trade. They didn't want me to be, and I traded partners capital. So I traded, the end reason. Back then, Salomon Brothers was a partnership. So the partners had to keep most of their capital inside the company. So it was a big responsibility to trade their money. So I traded 10% of the partners' capital. So they didn't want me to be distracted with anything other than their money, and preserving and growing their wealth.
You were good at that, yes.
I started getting. They subscribed to every academic journal, and so every day a new journal came in. I got on my desk, as everybody else did, a copy of the table of contents. You would circle the articles you want, and they would deliver those journal articles to you within 2 days. So, so it really encouraged people to learn and think and to continue to read the best work that was coming out of academics and seeing how it could be applied, by Wall Street. So it really encouraged, the accumulation of knowledge, real deep knowledge, not superficial knowledge, not, not how to create a phony Telegram community, but real deep knowledge on having people continue to learn and grow. So from several of the companies that had pursued wanting me to be an advisor, I would tell them I would consider being an advisor if you help put this project together where we create a handbook, sort of like Wall Street did for their people, and that we created journals where some serious people could create, really good in-depth research. And the University of Chicago has a place called Center for Research and Security Prices. So there they keep a database of all this stuff, and they get grants for people to do research using all that capital market data and seeing what information can be produced that helps make people smarter. So when Fannie Mae or Freddie Mac first started offering mortgage-backed securities, they started building databases of the performances on each one of those, each one of the mortgages embedded in the performance. They figured out a way, how do I get you information so you could price better? And the better you think you can price it, the more liquid markets are. Okay, this system has no information out there. And people are figuring out more ways not to tell people things than ways to tell people things. So, so I wanted to get people like Andreas Antonopoulos and and Vitalik and BM Latimer, the people to just say, I want to transcend my project. So what I want to do is I want to have people accumulate knowledge. So I try to for people who knew them, I tried to reach out and say, how can we do something to do that? And none of them are interested. So they're all interested in promoting, their own brand. The other problem in the community is the Bitcoin maximalists. People call me a Bitcoin maximalist because I've said, if it's not Bitcoin, it's a shitcoin. But I've been very clear. The fact is, I'm not anti-blockchain. I'm anti-hype. So, and I was anti, and I remain anti-ICO, but my complaints about ITCOs have been very, very specific. Nobody should get rich just by writing a white paper. Okay, the governance in ICOs are terrible, and the investors buying utility tokens don't care about the utility of the token. They just are speculating in the value of that token. So that whole ecosystem was fragile. So it's not that I said the ICO is bad. I said the way it's executed is bad because it creates perverse incentives. So I was against the incentive structure embedded in the system, not necessarily against blockchain. So the Bitcoin maximalists are against blockchain. So they think any other token than Bitcoin is bullshit. So they're like Taliban, okay? So they're fanatics. So it's all about hard money. But one thing is hard money. The other is organizing economic activity. So, so we should be concerned. We should be more concerned about how we organize economic activity than what we call money. But the debate just about Bitcoin is a debate just about money. It's not about how we organize economic activity. So we have to have the conversation about both. How we organize economic activity and what's the best money under which we organize economic activity. So that's a conversation nobody seems to really want to participate in, and because I haven't found people who want to join me in that conversation. So and that saddens me. I think part of it is some people say I'm unrealistic in what I hope for, too idealistic. Then, which means they're just about money, which means for saying that they want to do disruption, they don't want to do disruption. So, which means they're happy with the way the world is today. They only just want to make a little money off of the way the world is today. And I think the way the world is today, just like I thought the ecosystem for Bitcoin, for blockchain was, and ICOs were not sustainable. Our global world is not sustainable. If we, a number of times when I give talks, especially with smaller groups, and the way we organize economic activity has to change because it's not about reward doesn't go to who creates value. Reward goes to who has bargaining leverage. So, like right now, it's just in the last 3 years, Uber driver compensation has gone down 50%. Yet the value of Uber as a company, as a platform, has gone up significantly. So somehow the Uber drivers are not participating in the success of Uber. And you can also notice that, when we had a bad stock market when the Fed said it would raise interest rates, and now the Fed said it won't raise interest rates, and the stock market went up. So that's an indication of how much of the stock performance is related to the company versus related to central bank activity. So if I have a stock option plan where almost all the stock options give to the executive, yet most of the increase in my stock price has nothing to do with what I have done, why should the executive be the only one who benefits from what Powell does or what Bernanke did or what Janet Yellen did? Why whatever they do is not shared equally amongst every employee? Why is it uniquely shared by the CEO? So how is that fair? If someone could show me that the CEO is uniquely the person responsible, that if interest rates went up 1,000,000%, that company would still, stock price would still be the same, okay? So that stock price is just purely an indicator of the performance of that executive. If somebody could show me that study, then I'll say, okay, I believe it. But but the stock price is not just a function of what the executive does. The stock side is more heavily related to activities the executive has no control over. So if the stock price is more a function of what the executive has no control over, why do they get uniquely the benefit associated with activities that are done by governments? So it means that the government is doing activities that they understand benefit only a small universe of people. So that's why we have the wealth inequality. The government's doing a lot of things to pump up stock prices, to stump up assets, and the biggest assets that are appreciating are the ones owned by the wealthy. So they're increasing those assets. If I had a house in Manhattan, that I had a fancy apartment in Manhattan, and now all the hedge fund managers make a lot of money because of quantitative easing, so the real estate market goes up as a result of that. The homeowner didn't do anything to increase the value of the house. So who benefits from that? The few people who can afford it. So almost in the United States, almost all the appreciation in homes has been on the high end of homes in big cities. So throughout the rest of the country, there's been no real estate appreciation. You don't think the Fed economists know all this? So who could like a system like this? And I'm not a socialist. I mean, so go ahead. Sorry.
You do believe that blockchain can become this, what we can say, a democratizing force? Like truly believe.
More people, and I don't want to be self-serving. I've got more people speaking out like I did, where they decide they represent the ecosystem. They could disagree with me. Not everyone has to think the way I think, but they at least should think philosophically about the ecosystem. They shouldn't think narrowly about a project. They have to sell. What people find powerful are messages that people understand and relate to. The biggest movements in the world are religious movements. It's ideas, powerful ideas. Democracy is an idea. Okay, socialism is an idea. Okay, Judaism is idea. Christianity is idea. Muslim religion is an idea. Confucianism is an idea. Taoism, Hinduism, they're all ideas that a lot of people take very, very seriously, and it has nothing to do about making. And they're most important elements of people's lives are these ideas that have no monetary value attributable to them. So, but it's how people define themselves. And so early on, Bitcoin was an idea where people understood what it was. The blockchain, in the debate I had with Vitalik, and he looked to debate me. I was in a WeChat group, and he entered, and apparently the host of the group told me he entered specifically to debate me. So he asked permission to come in to debate me. So, and I asked him, and I guess he didn't like the conversation. I wasn't attacking him. In the group, I said, you all refer to Vitalik as a V-God. So he's a deity. There's nothing more centralized than a God. So how do you, so I asked him, describe, I wasn't attacking Vitalik. I was asking the community, can you separate Ethereum from Vitalik and define decentralization to me, because you all say you like decentralization. So I want you to understand what decentralization is to you, because if you're praying to a God and if his word is the ultimate word, then that means there's nothing more centralized than that. So I'm trying to understand how then you really support centralization. So I want to understand, do you believe in centralization or decentralization? So, and then he walked. And so I asked him, I said, what is the philosophical underpinnings of Ethereum? And he didn't answer. Then he ended up, after a few minutes, he said, then came back and wrote something. But they wrote something were not philosophical. They were defining some of the things you could do with Ethereum. So he really wasn't very good. Later, I've seen him make some statements, but and I don't mean I'm 63. He's 24 years old, so it's a big difference. I've had a lot more life experiences. He found tremendous success. Very young, and and he's been idolized by a lot of people very, very young, and that's got to be. And I think, given for his circumstances, I think he seems pretty level-headed kid. But he's still a kid, and a very smart one who wants to continue to get smarter. So on the basis, I have a lot of respect for him, and I hopefully that his intelligence will grow into wisdom. So he's not yet very wise, but he's getting wise fast for his age. I think to improve the ecosystem, we're going to need, people like that who really step up and can say, I really want to transcend my own brand, and I'm more concerned about, talking about creating a message. One thing, every religious group, every political party does is they get a message out there and they repeat it over and over again. Wall Street is very good with messaging Wall Street. You know, Goldman Sachs is not trashing Morgan Stanley, and Morgan Stanley is not trashing Goldman Sachs. JP Morgan does not trash Citibank, okay? Because they understand that while they compete with each other, they're competing with each other under certain rules because they're more colluding than competing. They don't want people to know they're more colluding than competing, you know? And so therefore, what they want to do is they want to make sure that they get, you know, the message out. You know, me as someone who was Jewish, I remember one time a rabbi told me, and I don't know if it's true because I haven't been in enough synagogues, but at least in the US, he said most of the time, almost all synagogues, a couple of rabbis had told me this, on Yom Kippur, during the high holidays, they'll give a sermon on intermarriage. And they choose that time because that's most of the time when all the Jews will be in synagogue, because the rest of the year, most of the Jews are not in synagogue. So they choose that year to message something that they think is important, because it's the only time they get people's attention. So the question is how do we get people's attention again? People don't believe in the tokens. They don't believe in the hype. They're not believing in anything. So what's the message that'll get there to resonate with people? So I think people have to point out the flaws in the current economic system, you know, and discuss what this community really represents, which is innovations on incentive mechanisms, innovations on governance structures. I designed for one company a security token. They were working on some capital market transactions, and at first they committed to do the project, but when they went to the SEC said, you have to choose. You want to get this acquisition done or the token done? And so they chose the acquisition over the token. So, but I'll tell you a little bit about it. I can't say much details, but I basically, instead of tokenizing gold, I tokenized the mine. Okay, so what was the value of that token? Okay, besides the fact that all the activity in the mine would now be on the blockchain, so all the activity in the mine would now be on. So you'd be able to track provenance. So I never need to extract it and mint it. I'm just tokenizing the content that's in the mining. So and I can tokenize proven reserves, possible reserves, probable reserves. So I can tokenize the entire thing. And now I have market prices. So if I want to go out and I want to do extraction, I know what the market thinks a probable reserve is worth. I know what it thinks a possible reserve will worth. So now I know whether I should be even doing more exploration or not, because the market's helping give me information I can't thoroughly have. So now you're saving money, you're not degrading the environment, and you're producing more information. And you create a new asset class, all of that through a token. So the other thing you can do is also realign incentives. You know, my idea in the structure of the token is that all these suppliers, all the people working in the mine would have to be, except for the workers, the day-to-day workers, you know, but people providing important services would be paid in the token. And that there would be an airdrop of the token to members of the community who lived around it, because now they have an economic incentive that, to the extent that there are negative externalities associated with the token, they're getting compensated for those negative externalities. That if gold goes up and they have, so now everybody involved in the ecosystem has the same incentives. You've now completely aligned incentives, and you're providing more information, and information that everybody can trust. Nobody can argue over whether is that ledger honest or not honest. You know, that you have a ledger that people can trust. So my token was designed to restructure incentives, to produce information, and to produce a new asset class. So I think all people who look at tokenizing projects, they should frame it that way. The framing still is in the traditional capital markets way. The framing is not sit back and say is, how can I organize all the stakeholders in the system to be aligned? So it's more how, right now people are just thinking, how do I raise capital? That's the wrong question to ask. It's how do I get all the stakeholders in the system better aligned? You know, how do I get better incentive? Better incentive alignment, the behavior will change. So, and that's what we want to have, is we want to encourage people to cooperate better. You know, even if they don't really want to cooperate, because they all understand it's their mutual interest to do so. So I think that's the real benefit that we get from blockchain and tokenization, is that we get a ledger that people trust, and we restructure incentives so that we're cooperating a lot more with each other. So, which is exactly, so for me, it's the ultimate fulfillment of Adam Smith's invisible hand.
Do you think tokenization of venture funds makes sense?
I hate venture capital funds. So I think it's the worst form of, I've been, you know, the only time, I discussed this something earlier, I never like to invest in a deal. You know, when I was younger, I didn't mind doing a deal that I controlled. Now I don't. Now I'm too lazy to do anything that I control, because that's too much work that I want to do. That I don't want to do. I want more time to think. I don't want to do a lot of things. I like to make suggestions to people, and hopefully they like those suggestions and they go do it. So even if I don't get any benefit from it, I don't create IP. Any ideas I have, I share for free, and I don't put any IP on anything I do. So, you know, why I wanted control was not because I wanted to make the decisions, is I wanted good governance. So I wanted to choose board members that I choose who I know would disagree with me, but I would respect that they would give interesting advice. So as opposed to some VC fund that said it's our money, we're putting, you know, our asshole there, and that asshole also has 20 other projects that they're looking at. And so they don't really have much time to think much about it. What they got to do is they got to justify the fees they get from the limited partners. So they have to know enough about what's going on. So if a limited partner calls and says what's going on in your portfolio companies, they'll have an answer to that question. But ultimately, they don't want to challenge management, you know, and ultimately, because none of them have skin in the game, because it's not their money, they only have upside. You know, they get performance. If their portfolio companies do well, they get a benefit, but they're not investing their own capital in the deals. So, you know, so for them, it's only upside. So their game is to invest in as many companies as they can, and understand most will do badly, and a few winners will pay off for all the losers. So they don't want to devote much time to governance of any company, because they have no incentive to do so. They just hope they chose well. One journalist, I think from Barron's, did a story on one firm, I think it was Pershing, the fund that Bill Ackman had. And for a several-year period of time, they discovered that all the profits generated by the fund, even though it's supposedly like an 80-20 split, you know, something like that, they found that of all the profits reported over a several-year period of time, that more than 70% of the profits went to Pershing, and like 29% went to the limited partners. I mean, so that's a pretty good business model, you know, for the funds, and that's why they can spend, you know, $1 billion to buy an apartment in New York and throughout the world. But I don't like that model at all. Most of them are pretty average investors. Most of them underperform the market, and they contribute very little to good governance of companies. So, and that's a reason why we have a crisis almost all over the world in low productivity. How can we say we're successful if ultimately we're not becoming more productive? You know, the whole point of a good business manager is to make the people around them more productive. We're failing at making people more productive. So how sustainable it is that we continue to fail at making people productive, and continue to create an environment where we have sustainable wealth. Sustainable wealth is based upon us becoming more productive through time, and we're not. And economists call the productivity conundrum. I think it's a very simple conundrum. If I'm a CEO, all I need to do is call up Janet Yellen and say, lower interest rates so I'm worth more. And then they lower interest rates and they're worth more. So why put any more effort into just doing that? Why are you motivated to work that hard if you know that your compensation has nothing to do with you going to work and doing a good job? You just got to do well enough not to get fired, okay? Oh, my workers have to be employment. Let me close this plant down and let me call up Trump or Obama and say, I need more workers. I need more workers from Africa and Honduras and Guatemala, You know, I don't want to make the workers I have more productive. I need more H-1B employees who I can pay half the wages to. So that's our business model today. I either call up the president to import more foreign laborers so I can fire more of domestic employees who get paid too high salaries, you know, according to them, and you know, and then call the central bank to get them to lower interest rates. So nobody's focusing on making these more productive. They're just focusing on easy central bank policy that'll make them richer, you know, and being able to continue to, instead of making workers more productive, replace them looking around the world, looking for cheaper and cheaper labor, rather than making the existing labor force. So that's perverse incentive. You know, back when we had more closed markets, you're a manager, you only succeeded if you made the labor force more productive. Now you're just searching the world, figuring out how to replace everything cheaper. But what we can see is the product of all that is not increasing productivity. And if we didn't have the central bank activity, doing it, making it appear like these businesses are worth more, you know, then because most of the inflation is a bubble related to monetary policy. So this is a real crisis that people are not really confronting, and economists just call it a productivity conundrum, you know, because they're all shitty economists.
It's absolutely
amazing.
It's really exciting to listen to you.
Thank you very much.
Bye-bye.
My pleasure.
Thank
Bye.